At this point, let's jump into the bigger picture charts and see what we can expect in the upcoming week. So looking at the S&P daily chart, we can see that the market is still balancing near the highs, and on the larger time frame, the buy side is still in control. Now short term, our bias heading into the upcoming week is going to be neutral because the market has been very range bound for the last several days. So at this point, heading into the upcoming week, on the smaller time frame, if the buyers can hold ES above 76 to 78, then that would still leave the door open for a break beyond 83.75 to 85.75. A breakout above 85.75 would serve as a bullish confirmation, and that could lead to a move back up towards the all-time high at 92.5 to 94.5. On the downside, a breakdown below 76 to 78 would signal weakness, and then if we take out the 71.5 to 73.5 area, that would tell you that the sellers are stepping back in. From there, we can revisit the 62 to 64 support, which marks the recent balance area low, and that's an important inflection point for buyers. So if the 62 to 64 zone fails and we start to see some heavier downside liquidation, then below that area, the market could test the 25.49 high volume node, and from there it could even go down and test that 25.42 to 25.44 support, where we would still expect responsive buyers to be active on first test. So the way the market context is set up heading into the upcoming week, our bias is going to be neutral, but it won't remain neutral if we start to see some directionality or a break of these short-term support and resistance zones. So in the event that we break out above 85.75, then we're not necessarily going to be neutral. We'll be expecting the market to go up to 92.5 to 94.5. And then beyond 94.5, there is no hard resistance, but we would have to see some decent upside momentum and broad market strength to push to a fresh all-time high. On the downside, if you take out 76 to 78, that would be a warning sign for buyers, and we could go down and test 71.5 to 73.5. If you take that area out, then the next spot is 62 to 64, which is significant, and a failure of 62 to 64 would signal sellers in control and bring the 49 and the 42 to 44 support area into play. So that is how the S&P is set up. Let's move on to the Russell. So looking at the Russell daily chart, we can see that the bigger picture bias is still clearly bullish, but short term, we've seen a breakdown attempt below this trading range over here. So heading into the upcoming week, we'll be watching to see how the Russell responds to the 1482 to 1485 area. If the buyers can push the Russell back above 82 to 85, that would serve as a bullish confirmation, and from there we could go up to 1495 to 1498 and perhaps test the resistance around 1500 to 1501, and then the big high volume node within the recent balance is at 1510.2. Now in the event that the Russell continues to hold below 1482 and balance at lower prices, that would tell us that perhaps this recent breakdown actually has some legs to it, and we could revisit the 1462 area, and then below that we have support at 1457, and then bigger support in the 1440 to 1450 area. So even if the Russell continues to sell off short term, once we start getting back in this recent range, you can see this marks a larger time frame breakout, and we can expect buyers to be active first time down. So the top of this range and the breakout area is around 1451, 1452, and then below that we can see that this is an important swing low around 1438.5. So short term, our bias in the Russell is going to be neutral, and the main question heading into the upcoming week is whether the Russell can get back above 82 to 85. That is really going to help set the bias going forward. If we can get back above 82 to 85, buyers can regain control, and we can see a move back up towards 95 to 98 and 1500, and then perhaps even higher. But continuing to hold below 82 would signal weakness, and eventually that could lead to even lower prices. So we're going to have to continue to be nimble with our bias in the Russell and see how it responds to 82 to 85. Now let's move on to Nasdaq. So NQ so far has been the stronger market. We can see that on Thursday it pulled back and tested this key high volume node at 62.47 and then bounced back up, and so far it's been holding up quite well. Now that high volume node at 62.47 actually recently shifted up to 63.11, and that's a key level we're going to keep an eye on heading into the upcoming week. we know that these key high volume nodes can serve as launching points of directional conviction. So from here on out, if Nasdaq can hold above 63.11 and then take out 63.21, then it would be setting up for a test of the all-time high at 63.51.5, and from there it could even set a fresh all-time high. But if we start to see a failure at 63.11 and the market starts to head lower and take out the 63.81 to 63.84 area, then it could be setting up for a retest of 62.36 to 62.47. That is still a spot where buyers can be active in Nasdaq. And then below that, we have support at 61.92 to 62.02. And that is yet another spot where responsive buyers can be active in NQ. But so far, Nasdaq has been the stronger market and it has been leading on the way up. So when looking at the equity indices, NQ is the strongest. After that, we have the S&P, and then we have the Russell, which is lagging behind and showing relative weakness. So that is how NQ is set up heading into the upcoming week. Now, last but not least, let's jump into crude oil. So looking at the crude oil daily chart, we can see that recently crude oil put in a larger time frame balance breakout, which has taken it up towards the $57 to $58 mark, which was identified as larger time frame resistance in last week's video. So short term, we know that the buyers have been quite dominant in crude oil, but it's testing this big area of resistance, which is why we've seen so much friction up here. You can see that the first time up towards 57.68, the seller stepped in, and now short term, the market has started to establish a new trading range up here. So heading into the upcoming week, we just have to understand that short term, the buy side is in control and dominant in crude oil, but at the same time, it is testing this larger time frame area of resistance where sellers can still be active. Now, we've already seen a response around the $57 to $58 mark, and if we continue to bump up against 58, then eventually we can still get a move higher towards 59 and 60, but that is still larger time frame resistance, and that is still an area where sellers can be active. So if we switch over to the weekly chart, you can see that oil is testing the upper edge of a larger time frame trading range. And the higher it pushes towards resistance, the more likely sellers are going to step in. So you can see that 57 to 60 is a pretty decent area of resistance in crude oil on the weekly chart. And given that oil has been going straight up for the last few weeks here, in the event that oil tries to break out beyond the $60 mark, it is more likely that that breakout attempt will fail. So beyond the $60 mark, we have resistance around 63.5, and then 65.5, and then big resistance around the $68, $69 mark. But again, given that oil has been heading higher for the last few weeks here, I think it's still going to struggle in this 57 to 60 area. And in the event that it tries to break out above 60, that breakout is going to be more prone to failure and a reversal back into the range. Switching back to the daily chart, on the downside, we have support at 55.6 to 56.6. And in the event that we take that area out, the next area of decent support is going to be at 54 to 54.5. So that is how the crude oil market is set up on the larger time frame, and that wraps up this week's video. I hope you all had a great trading week, enjoyed your weekend, and good trading in the week ahead.